Welcome to the Economist Word Spotlight. Have you ever been reading an article, a really compelling one, and hit a word that felt like a secret handshake to the deeper meaning?
Oh, absolutely.
It's like having a crucial piece of a puzzle, but not quite seeing how it fits the whole picture.
Right. And in our world of constant information, truly understanding a word in its specific context isn't just about vocabulary building. It's really about sharpening your critical thinking, grasping the intricate nuances of complex global topics.
Yeah, it's a difference between just hearing the news and actually understanding what it signifies.
Precisely.
Today we're taking a closer look at a fascinating article from The Economist titled, "China is Ditching the Dollar Fast." We're going to try and unlock some of the key terms that help us understand the powerful forces at play in this rapidly evolving global financial landscape. Think of these words as the lenses you need to really see the bigger picture clearly.
That's a great way to put it. This article, it delves into China's deliberate strategies to lessen its reliance on the U.S. dollar and, how a confluence of factors is shaping both its own currency's influence and the flow of global investments. The language used here is incredibly precise, and for you, understanding these words is your direct path to being truly well-informed on this.
Okay, so let's jump right into our first word. It's a powerful one, erratic. The article states, President Donald Trump's erratic trade policy, gaping fiscal deficits, and threats to the independence of America's Federal Reserve risk badly hurting the dollar. Now, we all sort of know what unpredictable means, but erratic feels like it carries more weight here.
It certainly does, yeah. When something is described as erratic, we're talking about more than just unpredictability.
Yeah.
It implies a lack of a consistent direction, a wild, irregular, almost chaotic pattern that generates deep instability and uncertainty. So in this sentence, erratic doesn't just describe Trump's trade policy as unstable. It paints it as fundamentally unreliable and inconsistent. And that creates significant systemic risks for the U.S. economy and, crucially, for the dollar's role globally.
So it's not just a little bit up and down, but truly without a clear compass, right? Like that one driver we all know whose lane changes are. Well, let's just say surprising. You never know what's coming next.
Exactly, and that makes everyone nervous.
Right.
It's the opposite of being consistent or stable. And in the world of global finance, trust and predictability are paramount, especially for a currency like the dollar.
Which has been the bedrock for so long.
Precisely. It's been the bedrock of international trade and reserves. Policies perceived as erratic erode that trust, and that makes other nations like China actively seek alternatives. This isn't merely about financial volatility. It's a subtle but significant geopolitical shift, affecting the dollar's long-term standing.
That puts a whole new spin on it. Okay. So while erratic U.S. policies might cause some concern, the article paints a contrasting picture regarding China. It notes, by contrast, China's tightly controlled currency, the yuan, has reached its highest level since Mr. Trump was reelected in November. Foreign investors are piling in. This phrase, piling in, it sounds almost eager, like a rush.
It is, and that's the key. When people pile into something, it means they are entering, joining, or investing in it in substantial number very quickly, often with a clear sense of enthusiasm or urgency.
Right.
Here, it vividly describes foreign investors rushing into China's markets. It suggests they clearly see these markets as a strong, immediate opportunity, perhaps, viewing China as a more stable environment compared to the erratic backdrop elsewhere we just discussed.
I can almost picture it like shoppers bursting through the doors the moment a store opens for a massive sale, that kind of feeling.
Exactly that. It's that rapid, enthusiastic rush driven by a clear perceived advantage. The phrase piling in emphasizes both the speed and the excitement of these investors. It signals they've spotted something valuable, maybe undervalued assets or strong growth potential, and they really don't want to miss out. This stands in stark contrast to the idea of investors pulling out or withdrawing from a market.
Highlighting a big shift.
A significant shift in sentiment and capital flows towards China, yes.
Now, this rush of investors, this piling in, might feel positive now. But the article reminds us that China has had its share of financial turbulence. It mentions that ended painfully back in 2015 when a stock market rout and currency devaluation saw money rush for the exits. Rout. That sounds like a really serious word for a market event, doesn't it?
It is a very serious word, yeah. A rout means a sudden, disastrous, and disorderly defeat or collapse, often sparking widespread panic.
Wow.
In financial terms, it's a sharp, chaotic, and often uncontrolled decline in markets. The article uses it to describe China's stock market crash in 2015, which wasn't just a downturn, it was a systemic breakdown that triggered a massive, panicked flight of capital.
So not just a correction or a dip, it's a full-blown financial, well, catastrophe.
That's a good way to put it, like a sports team suffering an embarrassing, undeniable defeat, or, as you said, a chaotic collapse.
Right.
Rout here underscores the severity of that 2015 crash. It shattered investor confidence, and it also compelled authorities to tighten their grip on capital flows to prevent further destabilization.
A lasting impact, then.
Definitely. It's the antithesis of a recovery, or a boom, and it serves as a stark historical reminder for both Chinese policymakers and international investors of the risks involved. Learning from an event like that profoundly shapes future financial strategy.
Okay, that makes sense. It's clear China is learning from its past financial turbulence and strategically managing its global economic presence. So how did these internal efforts, like the expanded outbound quotas we're about to discuss, connect to their broader ambition to offer an incentive for global investors?
That's a great link. The article details how China is managing its financial flows. The number of financial contracts open to foreigners to trade on onshore markets has more than doubled this year. Outbound quotas for domestic investors have expanded. Here, outbound is the key word.
Right. When we talk about something being outbound, it generally means it's going out or directed away from a specific place, like outbound flights leaving an airport.
You're exactly right. And in finance, outbound specifically refers to investments or capital flowing out of a country. Here, it describes the expanded quotas that now allow Chinese domestic investors to put their money into overseas markets.
Ah, I see.
This is a crucial strategic move. While attracting foreign investors and that piling in we talked about China is also allowing its own capital to venture out.
So it's a carefully orchestrated two-way street for capital, not just a one-sided attraction. Is that the idea?
Exactly. That's it, precisely. This highlights China's strategy to balance its financial openness. It's about diversifying risk for domestic investors, potentially learning from foreign markets, and gradually internationalizing the yuan by encouraging its use abroad. It's a sophisticated, controlled expansion of their financial system. Demonstrates a more mature approach to global capital flows compared to, say, the more restrictive past right after that 2015 rout.
Okay.
The opposite, of course, would be inbound flows, money coming in.
Got it. And what's driving some of these movements? The article notes, a lift in the stock market has given foreigners a financial incentive to hold yuan assets. An incentive that sounds like that little nudge, that reason to act.
Indeed. An incentive is a powerful motivation, a benefit, or a reward that encourages someone to take a particular action. In economics and finance, these are often financial gains or favorable conditions that directly influence decisions, like higher returns or lower risk. In this context, the rising stock market made it significantly more attractive and profitable for foreigners to hold assets denominated in yuan. It's a calculated move to draw in capital.
So it's that clear what's in it for me factor.
Pretty much.
Like when a company offers employees bonuses as an incentive to hit targets, or governments give tax breaks to encourage green energy investments.
Exactly. It's a clear carrot encouraging a specific desired behavior.
Okay.
Incentive here clearly highlights how financial gains and favorable conditions act as a magnet, drawing foreign investors towards yuan assets. It underscores the deliberate carrot effect China is employing to attract overseas capital, rather than a disincentive or deterrent which would, discourage investment.
It's part of the bigger strategy.
Part of their longer-term strategy to elevate the yuan's status on the global stage, absolutely.
It's fascinating how these individual words build such a comprehensive picture of China's strategy. And the article widens our view, showing other nations are paying close attention. It says, meanwhile, Brazil is mulling a new issuance, and Pakistani officials have been in Beijing to pitch potential creditors. Mulling over something.
It sounds like a quiet, thoughtful process, not rushed.
It is. To mull over something means to think about it deeply and carefully. Considering all the different aspects, pros and cons, before making a decision, it signifies a period of profound contemplation, really.
Okay.
In this particular sentence, it tells us that Brazil is seriously considering whether it should issue bonds denominated in yuan. They haven't decided yet, but they are giving it considerable strategic thought.
It's that period of weighing options, isn't it? Not a snap judgment, like when you mull over a big life decision for days, turning it over in your mind.
Exactly. It speaks to a cautious interest.
Mulling shows that Brazil is not yet committed, but is cautiously weighing its options regarding whether to join this yuan bond trend. It suggests a blend of caution and interest, quite different from simply deciding or acting on a decision without that careful consideration.
And that word choice is important
Because it indicates a growing global trend of nations exploring alternatives to dollar-denominated financing. It signals a broader shift, potentially, in financial allegiances. They're not just following a buzz, they're seriously considering their options.
That's a powerful connection. And speaking of buzz, our final word really captures the atmosphere around these developments. Despite the buzz, officials are taking a long view. What kind of buzz are we talking about here? Excitement?
Yeah.
Hype?
Yeah, both of those. A buzz refers to widespread excitement, attention, or a lively discussion about something. It's often the hype, the chatter, the sense of anticipation surrounding an event or trend. Here, it describes the considerable excitement and attention surrounding China's various moves in international finance. Things like the yuan's increasing prominence and that piling in of foreign capital we discussed earlier. It's the general feeling in the financial world, the talk on the street, so to speak.
So it's that almost palpable energy in the air, right? Like there's a lot of buzz around a new breakthrough in AI, or the new movie created a huge buzz at the festival.
That's a perfect way to put it. Lots of talk, lots of excitement, lots of anticipation.
Gotcha.
Buzz emphasizes the hype and chatter surrounding China's yuan strategy. However, the contrast provided in the article is just as important. Despite the buzz, officials are taking a long view.
Ah, okay, so the officials aren't caught up in it.
Exactly. This implies that while the outside world is excitedly chattering and reacting to the immediate shifts, policymakers themselves are maintaining a calm, patient, and strategic approach. It's a subtle but critical distinction between short-term market reactions and long-term national strategy.
So don't just follow the buzz.
Right. It's the opposite of silence or indifference, yes, but it also highlights the wisdom of not getting swept up in the immediate excitement.
What a truly fascinating journey through these words, really. By understanding terms like erratic, pile-in, route, outbound, incentive, mull, and buzz, you gain so much more than just a dictionary definition, don't you? You get a clearer, more nuanced picture of the strategic moves, the historical lessons, the motivations shaping global finance right now.
Indeed. Precision in language really is the bedrock of understanding complex economic shifts. These words aren't just labels. They are crucial insights into the motivations, the risks, the strategies shaping the world's financial future. And knowing them helps you, the listener, to question assumptions, see the larger patterns, and consider multiple viewpoints when you read the next big story.
It's your edge.
It really is. Your edge in a world overflowing with information.
So as global financial landscapes continue to shift and the yuan seeks its place, maybe the question for you to think about is, what other terms will become critical for us to truly understand the next big economic stories? And how can we avoid getting caught in the buzz without appreciating that all-important long view? Thank you for joining us on the Economist Word Spotlight. We hope this has given you a clearer lens through which to view the world.